Hey there, awesome accounting student. Mark Franke here. This is Accounting 101, Chapter 12, the cash flow statement. We're going to do two. We're going to do one that's fairly simple and straightforward. This is the serial problem for Chapter 12, and it's on page 493. And then we'll do a more difficult one. This is 12.3b. We'll get to that in a minute. So this is the business solutions. And by the way, if you haven't looked at the first chapter 12 video, suggest you stop this one and go and look at that one. But I have provided some worksheets here. This is business solutions. Cash flow worksheet. And this is for the 3 months ended March 31, 2020. Okay, and I'm going to put in all of the accounts. The debits are going in as positive, and the credit balances are going in as negative amounts. And when we total it up, we should get 0 because debits should equal credits, and they do. Hopefully you can write as fast as I can type, but you should try to do this with your pencil because it will help you learn. So the first step is to get the balances into the worksheet and total them up. Make sure that they balance. In other words, debits equal credits. That's positive. It's important to start with. And then we are going to take the previous year and subtract the last year. Previous year, subtract the last year. Previous year, subtract the last year. And that way, if an asset went up, it will show as a negative amount. If an asset went down, it will show as a positive amount. And that's why we're doing this, is in order to get these numbers so that we can plug them into our statement. This is just a worksheet. This isn't the statement. This is just a worksheet that will help us to prepare the statement when we get done. It's very useful, and it's really essential to be able to do it. Now, prepaid rent didn't change. Office equipment didn't change. We're taking the previous year and subtracting the current year each time. And when we total these up, because the balance sheet balances, if we've done the math correctly, it should zero out. And it does. And so we're going to identify each one of these things as operating, investing, or financing. So I'll just put an O for operating, an I for investing, and an F for financing. Okay, so accounts receivable is going to be an O. And I don't want these to be red, so we'll just get rid of that. Okay, and let's make that a capital just so it stands out. Merchandise inventory, operating. Computer supplies, operating. Prepaid insurance, operating. Prepaid rent, operating, although the change is there's no change, so we don't need to worry about it. Office equipment would normally be investing, but we don't have any there. Accumulated depreciation, we're going to deal with that and add them together, but it's operating. And computer equipment would be investing. Accumulated depreciation, operating. Accounts payable, operating. Wages payable, operating. Unearned revenue, operating. Common stock is a financing. And retained earnings, we're going to split that apart up here. Net income was 18,833. That's going to be operating. And again, let's get rid of the red. And then, of course, retained earnings is going to change by dividends, and the dividends is 4,800. And so the net change of 14,033 is explained above, and dividends is a financing activity. Now, I want to add together the office depreciation and the computer equipment depreciation. So I have that added together, and that's, of course, going to be an operating activity. And now we can prepare our statement. From this information, it'll be fairly easy to prepare our statement. So let's go over there. And the first thing is to, of course, put the heading on. And this is a statement of cash flows for the 3 months ended March 31, 2020. Okay, net income, 18,833. That comes from the worksheet here. And I'm going to make these yellow as I use them so that I know that I've used them. Add depreciation expense. That's 1650. I've used that one now. That's here. And I'm going to pause the video, see if you can come up with the amount that's net used by operating activities. I'm going to plug in these numbers from the worksheet and then total it up, and I'll be right back. But try this on your own, pause the video, and see if you can get the numbers in here. Okay, I'm back. Did you get negative 515? Negative 515 means we have cash used by operating activities. If that's a positive number, we would say provided. Net cash provided by operating activities. And the fact that this company did not provide any operating cash flow is not good. Companies that can't generate positive cash flow are on the road to ruin, because you should be able to generate positive cash flows. If you think about a company like McDonald's or Walmart or Amazon or Apple, they generate tremendous amounts of operating cash flows from whatever business they're in, selling burgers or selling computers or selling, well, Walmart sells everything, and so does Amazon. Anyway, the point is this company has negative cash flow from operating activities, which is not good. Okay, so I have highlighted the ones I've used so far, and so Now I know the ones that I just still need to deal with. So let's go back to the statement and continue on down into the cash flow from investing activities. And frankly, we don't have any cash flows from investing activities. We'll just put a 0 in there because there's nothing there. But we did receive some cash from the issuance of common stock. That's going to be $25,000. We also paid some dividends, so that's going to be shown here. And so our cash provided by financing activities is $20,200. And I'll make this smaller so that when we add together the negative 515, of course the investing is 0, and the financing activities is $20,250, we should get the net increase in cash. $19,685 comes right from our change in cash, $19,685, and it went up. That's good. So I'm going to go ahead and highlight all the ones I've used now. I've used all of these, and just so that they become all yellow and it's all good. And so then we can take our cash balance at the beginning of the year. Oh, this is actually for a 3 months period. That's okay. 19,685 is the change. 48,372 was the balance in cash at the beginning. And when we add these together, we get the cash balance at the end, which should tie to the balance sheet. Okay, so that's kind of a fairly simple statement of cash flows. Let's move on to one that's a little more complicated. This is problem 12.3b, and this is in your book on page 491. In this case, I have prepared the worksheet with the balances on it. And so I'm going to stop the video. I want you to take some time and look at the net change. Once again, we are taking the previous year and subtracting the new year. So go ahead and calculate the net change in each one of the accounts, and I'll do it, and we'll be right back. Okay, I'm back, and here is the net change in each one of these accounts. I've also totaled up the 2019 and the 2018 and the net change. It all balances to 0, so I know at least I've got a fence around the farm, so to speak. And now we can do an analysis, and this is we're going to have to do some subsidiary schedules here to get all of our ducks lined up so that we can prepare the statement of cash flows. Okay, so we're going to start with the retained earnings, and I'm going to use an A here for that, and we will put that A over here because we're going to explain the net change in retained earnings. The net change in retained earnings is because we had $158,100 in net income, and we paid dividends of $53,600. So the net change is $104,500. This is operating, and this is financing. And I'm going to color code these so that we can add them up and make it look obvious. So I'm going to do yellow for operating, and when we're done with all the operating, we'll total them up. And I'm going to use blue for let's use like a light blue for the financing. And then we'll use like a salmon color for investing. We'll get there. So the second thing we need to do is look at the change in equipment. The change in equipment, I'm going to label that with a B. And that is here. The change in equipment. And of course, we sold some equipment, which was $51,000. So that we got, that's the cost of the equipment. That's not how much money we received. We'll get to that in a minute. But we also bought some equipment, which would have had a negative effect on cash flows. So when we add these two together, we're going to get that net change of $62,250 over here. So that explains what happened here. But we need to look at it further down below to see how much cash was involved. But right now we've just made a schedule of what the net change is. Then we had our change in accumulated depreciation. We had depreciation expense of $38,600. That is an operating activity. So we'll make that one yellow. And we also had some accumulated depreciation related to the equipment that we bought, $22,850. So now we've done an explanation of the net change, which is $15,750. We'll mark that with an E over here, and we've explained that change. So that depreciation expense is going to go right to the operating section. But now we need to analyze the equipment that we sold so we can figure out how much cash was involved. The cost comes from up above. That's the $51,000. We'll label that with an F so we know where that came from. Oh, let's see. Yeah, F. Okay, and then the accumulated depreciation related to that sale was the $22,850. We'll call that one G, just to reference it down, so that the book value on the day that we sold that equipment was $28,150. They told us we received $26,050 in cash, so we have a loss. We have a loss on the sale of that, and this is going to be the cash we received is an investing activity, and the loss is an operating activity. So we will put that as a yellow, and then our investing activity we'll use like maybe a salmon color, like something like that, and so then we'll do that. Okay. Now continuing on, we had the equipment that we bought, and let me make this a little smaller. We'll use H now. Okay, so the cost of the new equipment, it came from up above. That's the $113,250, and we'll label that one I and I. And then we signed a long-term note. The long-term note was $70,000. So the amount of cash we actually paid for that equipment is $43,250. That is an investing activity. And we will use that salmon color for that. So, but then we had a long-term note. Our long-term note was the 70,000 from up above. We'll call that one J. And we made some payments on the note. So in other words, we borrowed this money to buy this piece of equipment, and we made some payments during the year. We made payments of $47,500, and we will label that as a financing activity. And so the net change, we've accounted for the net change in long-term notes. That's I, and we'll label that there. So now we have accounted for most of our changes. The only thing left is to, and we'll call this one K, is the number of shares. So that's going to be the paid-in capital and the common stock. There were 3,000 shares that were sold at $15 a share. So there's the 45,000 that relates to the two accounts. And then now we can take a look at our operating activity accounts, our current assets and liabilities. This is going to be operating. This is the net change in merchandise inventory. The net change in prepaid expenses is operating. The equipment we've already dealt with. Accounts payable is operating. And the short-term notes payable is going to be a financing activity. So we're going to label these or paint these as yellow, the operating. And then the financing is going to be blue. And I believe now we have accounted for everything. I'm going to know because I'm going to add them all together. So if I add, I'll tell you what I'm going to do. Stop the video, take all the yellow, you can pause it, take all the yellow, add them up, take all the salmon, add them up, and take all the blue and add them up, and you should get a net change in cash of 61,900. Actually, this is going to be positive, 61,900. When you add all those up, you should get a net increase in cash of 61,900. All right, we'll stop the video and make those. Okay, I'm back. And we have now check figures for our three categories of cash flows. Operating is going to be $130,200. That's cash flow provided by operations. Investing is a negative $17,200. That's cash flows used. And financing is $51,100. That is also cash used. So you've got all the components here. It's just a matter of grouping the yellow at the top, the salmon colored in the middle, and the blue at the bottom. Okay, so I've provided you with a schedule. This is for, this is the Gazelle Corporation. Statement of cash flows. Not statement of cash flows. So let's fix that. And this is for the year ended December 31, 2019. We will start with net income. So again, Your check figure is $130,200. For operating activities, your check figure for used is $17,200, and your check figure for financing is used of $51,100. So I'm going to pause the video, fill in these numbers, and total them up and make sure you get the check figures. Okay, so when we plug in all the numbers from our worksheet, the yellow section under operating activities, the salmon section under investing activities, and the blue section under financing activities, we get a net increase in cash of $61,900. There's our check figure. Add the beginning balance in the cash account. We get the cash at the end of the year, $123,450. This is like a puzzle. All the pieces have to fit together, and it's going to take practice. My advice would be to do this serial problem and problem 12.3b over again, and then work on the A problem 3a. Okay, that's it for this video. Thanks for listening, and I'll see you again next time. Bye-bye.